starting to appear in every segment of the U.S. stock market. Although investors are pulling their best efforts to keep propping up the massive bubble that's been forming over the past 2 years, conditions remain extremely risky, and rising prices do not mean that real value is being added to stocks. In fact, considering that the U.S. economy is officially moving towards a recession, and the global outlook is indicating that more turbulence is to come, the latest market frenzy may be just an opportunity to sell before this super bubble bursts. And given that stock prices have been stretched to the limit, when the crash finally occurs, it has the potential to wipe out 80% of the market's value. As the Fed tapers its asset purchases to fight runaway inflation and global production collapses, the countdown for a disaster has begun. Today, we have compiled the latest insights and warnings of some of the sharpest minds on Wall Street. So before we move on, please don't forget to leave a thumbs up and subscribe to our channel to keep updated with our future videos. Well, after starting off the year in one of the most bearish trading sessions since the sell-off of March 2020, stocks have bounced back in recent weeks, but experts say the correction is not over yet. The sell-off may have paused for the time being, but considering that peace talks between Russia and Ukraine are seemingly off the question these days, the escalation of the conflict is likely to continue to put stress on the already stressed global economy. Adding that to the fact that inflation is nearing 8% in the US and rising costs are threatening to derail growth and hurt consumer sentiment, today's conditions cannot support another speculative frenzy. On top of that, the Federal Reserve is tightening policy in an attempt to cool down prices, but the new measures are putting the economy at risk of a major recession, and asset bubbles in financial markets may be taking their last breath before they pop. With the hope for more government stimulus being crushed, the U.S. stock market is about to lose its fuel. Congress has effectively decided to block further spending bills that President Joe Biden was so eager to sign. The combination of all these factors is likely to weigh on market sentiment sooner rather than later. And according to Peter Cecchini, the director of research at the hedge fund Axonic, all of them create significant risk for a sizable stock market crash. The main thing that has changed since the beginning of 2022 is that now another major threat has materialized: the Russia and Ukraine crisis. The clash between two of the biggest agricultural superpowers in the world has wreaked havoc on supply chains and sent oil prices to historic highs, further fueling inflation around the world. In a recent note, Cecchini warned that the threat of a devastating recession in the U.S. and around the globe is growing, citing three major catalysts that are acting together right now. He wrote, "The presence of at least one of three ingredients often leads to recession: Fed tightening, perhaps in response to inflation or asset price bubbles; commodity price shocks; or systemic financial market disruptions." The Fed is tightening. What's quickly evolving into an oil price shock will only exacerbate the tension the Fed faces between inflation and unemployment. Finally, the unintended consequences on the global financial system of sanctioning a $1.7 trillion economy are unclear, he added. Thus, there's now a good chance all three could happen at once. In Russia, investors have faced the consequences of the toughest round of Western sanctions ever recorded, which has led to a loss of around $259 billion worth in stock market value. The ruble collapsed to the lowest level in history, while the cost of insuring Russian debt against default soared to the highest since 2009. The Russian stock market crashed by as much as 45%, their biggest ever decline, which forced the Bank of Russia to intervene in the foreign exchange market for the first time in years and take measures to control volatility in financial markets. The offensive on Ukraine triggered shockwaves on global markets and sparked a fresh bout of risk aversion amongst investors. Cecchini argues that now is the time to reduce exposure to stocks and use the rally as an opportunity to sell positions before the bubble bursts. He said that despite the correction so far this year, major indexes are likely to still see a larger pullback over the coming weeks and months. He cited two circumstances with similar fundamentals to today's market environment. 2018, when investors sold stocks as a result of policy tightening, and the 1970s, when soaring oil prices and a stagflation led to a massive stock market crash. Just like Cecchini, a number of Wall Street experts, including David Hunter, the chief macro strategist at Contrarian Macro Advisors, are warning that the current rally is a melt-up that is merely preceding a meltdown, as some traders still hope for a slower pace of policy tightening. The uncertain environment is precisely why stocks are still going up, according to Hunter. But one of the largest ever stock market crashes will follow as inflation runs rampant, he said. Early January, we were already seeing talk about 7 hikes this year. It started out at 4 hikes, and somebody else said 5, 6, 7. You start playing leapfrog in terms of how many hikes we're going to have, and that's usually a sign that you're getting something built in pretty fast, said the market veteran, who's been watching boom and burst cycles in financial markets for the past 49 years. I think what investors are going to find, and it was going to probably happen anyway, is that the crisis between Russia and Ukraine really strengthens the case that we're going to see a reversal, because the rise in oil prices and everything going on with the restriction of resources and what it's taking out of the consumer's pocketbook, that's always going to lead to a slowdown in the economy that was already going to slow down. Given the amount of leverage in the stock market and the U.S. economy, Hunter warned that the coming stock market crash is going to be monumental. In an interview with Business Insider, the legendary investor said that an 80% pullback was already a real possibility before, but now it is already on the horizon. In 2021, trading volumes for options and futures contracts reached a record of 9.93 billion contracts, according to data from the Options Clearing Corporation. Hedging activity by options traders can worsen stocks' volatility even further. When you have leverage, it exacerbates the upside, but it also magnifies the downside and probably speeds it up, Hunter stressed. Put simply, a normal downturn that might have occurred is going to become much greater because we have this leverage in the system. So, if investors keep on fueling the growth of the bubble as they wait for the Fed to finally take action, they might be able to push stocks back up toward record highs again. On the other hand, if surging gas prices and supply chain disruptions continue to aggravate inflation, a much bigger than expected crash is likely to occur. At this point, propping up stocks doesn't mean that indexes are recovering from their losses. In fact, on Monday, Morgan Stanley wrote in a note to clients that stocks remain in a bear market despite last week's rally. Bear market rallies are the most vicious, wrote Morgan Stanley's chief U.S. strategist Michael Wilson. While it could go a bit higher, led by the Nasdaq and small caps, we remain convinced that it's still a bear market. We would use this strength to position more defensively, Wilson cautioned. On the same note, David Rosenberg, the founder and chief economist of Rosenberg Research, sounded the alarm about the end of fiscal stimulus and ultra-easy monetary policy. He said, "Nobody has a clue what the economy or the market's going to look like once those training wheels are taken off the bicycle. So what's going to happen when all of that support is taken away?" said Rosenberg. "We have never seen the Fed embark on a tightening cycle with such a confluence of factors, such as a wobbly stock market with wide swathes either in correction or bear market as it is, Rosenberg continued, noting that rising geopolitical tensions and an alarmingly flat yield curve certainly do not help. In Rosenberg's view, the stock market is on shaky ground, and a recession is coming soon. This is definitely an uncertain time for investors. Risks continue to grow, and traders should brace for a lot more volatility in 2022 as central banks and government leaders around the world react to the worsening situation in Ukraine, its impact on gas prices, its impact on the global economy, and on inflation. Meanwhile, in the United States, as the Fed tries to stop rising prices but risks pushing the economy into a recession, it is safe to say that the sell-off will continue and that the correction will evolve into a full-blown market crash once investors realize that we have already reached the point of no return. A global financial meltdown is coming next. The nightmare is far from over. Thank you for watching. Please subscribe to our channel, and we look forward to seeing your comments below this video.